Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk to you. This is an interesting month, I believe, for the price of gold going forward. We had a big move up in June when it broke through 1350, and then it went up to 1440, and now it's around 1400. But I feel like people are kind of forgetting about it because it's not moving in such a way to get as much attention as it did last month.
Is that a good time for other investors to move in when people aren't paying attention?
I believe so. And in fact, I think the way the pattern on the charts is setting up, it could form one of the most profitable patterns, period. So what I'm specifically referring to, I got a book next to me titled How to Make Money in Stocks by William O'Neill. It's a classic stock trading book. It still remains one of the top bestsellers on Amazon, but the book's almost 20 years old, or it is. But he has a pattern he calls the cup and saucer pattern. That's where something comes out of a long base, it has a big move, and then consolidates. And that's basically what is going on with the price of gold. It came out of 1350, which was resistance for 5 years, and shot up to 1440, and now appears to be consolidating, probably will continue to do so and into the end of this month, possibly a few weeks into August, and then break out again. But that creates an opportunity to buy with a safe entry point, because you see consolidation. People who are traders who are looking at these charts, they have an idea of, I can buy this and I can put a stop loss on the 50-day moving average or something like that and see what happens. And really, a buying opportunity like that setup only comes in any market every couple of years, and I think that's what we have in front of us. I know gold fell over the weekend with last week's job numbers, which were stronger than expected, and that's causing people to focus on this short-term news and think, the Federal Reserve won't raise or won't lower rates by 50 points, or the economy might be better than we thought, so maybe gold isn't going to be as good. But they got to look beyond one news item, and really, I think people need to pay attention to what the markets are saying. And gold has held the gains. It's consolidating. If people were right and this was just a short-term move, then it would already have been going down below 1350. And we have other markets that are also suggesting that we're really upon a meaningful change in the interest rate cycle, where the Federal Reserve isn't going to be lowering rates just once, but much more than that, even with last week's jobs number. And if you look at the Treasury bond market, that's what it is continuing to say. The yield curve, that's the spread between short-term and long-term rates, is going back down, meaning it's the 3-month Treasury bond and a 10-year bond has already been inverted, and that inversion is actually continuing, and the 2-year and 10-year is starting to get closer to inversion. So these things that people were talking about in May that set the stage for the Federal Reserve shifting from saying they could raise rates, or at least not lower rates, to, okay, we're going to be lowering rates in the future. That big shift began because of that inversion, and the inversion is simply continuing. So right now, on July the 9th, you can buy a treasury bond and get 2.05% interest, or you could buy a 3-month bond and get 2.26% in interest. So you get more interest if you lend money for a less amount of time to the government than if you do the opposite. And that's because the bond market is forecasting lower rates, economic weakness, good chance of a recession next year. And that's the big story. Has not changed because of one news story of the jobs numbers. And that's ultimately what I believe is going to drive gold up, not just for a breakout at the end of July or in August, which would be significant, would lead to nice move ups in the mining stocks, and probably finally a big bid for junior mining stocks. But I think a move that's going to last well into the end of the year and beyond, probably last for several years.
Now, of course, the stock markets have been in record territory now for the last few weeks. Is that trend going to continue?
I don't know. I've actually, it's kind of funny. I've not been saying as much for the past 2 or 3 months about the stock market because I'm not that certain what it's going to do by the end of the year. But I'll say this, at the moment, I don't see any evidence that we're about to begin a significant decline. Now we're about to enter the earnings season, and a lot of companies have already warned that the earnings aren't going to be as good. And in fact, half of the earnings growth is due to companies buying back their stock. So that's not really a sign that the economy is about to grow in a meaningful way. So I'm not that excited about the stock market. I don't see a sign of a big decline. My guess is the market will hold up. There'll be a chance of some let's take the profit after that July rate cut that's going to come at the end of the month. Maybe we can pull back a little bit in August. But even if that happened, I would expect the S&P 500 to hold its May low, bounce off the 200-day moving average again and go back up. And then we'd have to look at where things are in September. And as far as the bullish scenario, where, okay, let's buy into the Fed cut. We've already been going up since December. The cyclically adjusted PE for the U.S. stock market is now making it the most highly valued market in the world. So from a valuation standpoint and even earnings standpoint, it's not that exciting to me. I think there's opportunities in gold, which I already talked about, that are better. But even the bond market has performed better than the stock market so far this year. In the corporate bond market has been on fire. So people could have bought ETFs like LQD, which is a corporate bond ETF, or TLT, which is a treasury bond ETF, and even made more money than they would have if they had all their money in SPY. Of course, the prudent thing for anyone to do is be diversified, not have all their money in the stock market or all their money in gold or all their money in bonds, but, have diversification and invest in multiple asset classes. But to be more clear, I guess, about your question about the stock market, I'm just watching it myself for the moment, and I don't really have a strong opinion about it, but that may change, when we're talking in August.
We'll have more with Mike Swanson right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Welcome back. We're speaking with Mike Swanson. Mike, are all these companies that have been busy buying back their stocks the last 2 years going to regret the moves when the market goes down?
Well, the ones that are going to regret it, and this is an interesting thing about the markets, we saw two stocks in the past 3 weeks that got taken over by other companies. And both these companies had engaged in massive share buybacks and had gotten themselves to the point where they were in economic trouble. One of them was Sotheby's, the auction house, and they actually got bought out by a private equity fund owned by a billionaire. And that Sotheby's bid was the symbol for it. They were one of the top, share buyback companies, and their stock started to go down last year, never got back up into an uptrend, and basically the management couldn't fix that situation, so I guess they just put themselves up for sale. And another company that something similar happened with, and I think we may mention it in the last year, is Caesars, the giant casino company. Now, they've been engaging in massive share buybacks, and they blew their balance sheet up. For every dollar in cash, they had over $8 in debt, which that's the danger level that drives companies into complete bankruptcy. And not only was that happening, but the board of directors was dumping their own shares, cashing out, and just pocketing the money, getting rich themselves off of the destruction of the balance sheet. In other words, they were borrowing money by issuing junk bonds to buy back shares to put the company in massive debt, while at the same time dumping their own stock. And the stock went down, it fell, broke the chart last fall, and never recovered even when the stock market went up. And I actually believe that company had positioned itself where it would be in danger of going bankrupt when the next recession hit, and when the bond market, would go down, because that will happen one day, and companies like Caesars would be in big trouble. But what Caesars did is they got bought out by another casino company, so that's restructuring the debt, that has more cash on its balance sheet, so it can cushion the situation. So to get back to answering your specific question, will companies regret it? Not at the moment, because the companies that do get themselves in trouble in the environment we're in are finding people to buy them out before they go bankrupt. And another company actually, talk about a third one that did this is the Stars company. That's a cable company. It's got a couple of channels in the United States. And the same thing. Buybacks, corporate balance sheet blown up, insiders dumping, on the path to bankruptcy. And a year or two ago, they got bought out by Lionsgate before they could go bankrupt. So companies are doing that. They'll continue to do that. But the day will come when the bond market, the corporate bond market, does not continue to go higher and it goes lower. And when that day comes, these companies won't be able to do this anymore, and the whole economic environment in the United States will change. But the most fascinating thing about this year is that Treasury bonds have gone up, the yield curve's inverted, but the corporate bond market, junk bonds have just gone up, and up. Better than the stock market. And in a normal environment, you would think the opposite. You would think, okay, if Treasury bonds are saying the economy's, slack or going to slow down, then that could hurt corporate America, and maybe people shouldn't be buying their debt. But that's not what's going on. It's the opposite. And I think that's a sign that we are in some sort of financial bubble in the United States in which there's so much money going around at the top, the so-called 1%, or with corporate America, that the corporations are making so much profit, or some of them, that they don't have enough opportunities to invest that money to grow their own business. So they're doing buyouts or they're buying the debt of other corporations, and this is helping to, fuel a buyout craze, fuel the corporate junk bond market going up, and up. And it's a fascinating situation, and that I think when we look back in the future will be seen as the wild times of 2019 and 18 in this cycle. In the last cycle it was flipping houses. That was the big bubble in 2000 and 1999. It was internet stocks, but I think this time around it's going to be this junk bond mania, and these corporate buyouts. Sotheby's was bought out for 68 times earnings. Caesars had some crazy buyout price of something like 3 times sales, 3 times revenue, and it's an interesting thing to watch and witness. But for the average American invested in the stock market, this helps keep the stock market up, and they're very happy to see that happen.
We'll have more with Mike Swanson right after the break.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, Richard Branson's space exploration company is now going to go public. Is that a good move on his part? Space Galactic.
I don't have detailed knowledge about it, but I would say it is based on 2 things. One, the stock market valuations are so high, as I was ranting about a few minutes ago, that now's the time to take advantage of that and dump your stock at a high price, if you can do it. So I assume that's what he's looking to do. And secondly is it's Richard Branson, and he's, knows a lot more about his business than I do. Not only that, but does seem to be one of the smartest business people in general. So I would assume he knows what he's up to in this case.
And I remember when Space Galactic said they would be offering suborbital flights to people for 20 grand, he was accepting Bitcoin as payment. And at the time, Bitcoin was worth about $250. I think he's going to come out ahead on this.
Yeah, I would say so. Yeah, I wonder if he still has those coins or if he's dumped them himself. That would be an interesting thing to know.
Now, with exploration of space being in private hands, is that an area that perhaps people haven't looked at investing in before?
Well, this is a reason why that this stock could do very well, because you think about, well, I'll put it this way. I read an article this morning done by Yahoo Finance, and it was an interview with someone with Ameritrade, and this person said that the most popular stocks bought by millennials are Tesla, What's Meat, and it was like 10 of these concept stocks, and every single one of these companies was losing money. But they were concepts of, new technology, some sort of fad, meatless meat, this kind of weird thing. And Tesla that's, has billions of dollars in debt, I think over $8 billion, and loses money. It's going to go bankrupt one day. But the article, the Ameritrade person was saying, look, these millennials are investing in crazy companies, and it's all based on concepts. They don't understand valuations. They don't understand earnings. They want the concept. Well, this Richard Branson thing, this is going to catch their attention, no doubt, in being the very first and biggest space tourism company. It probably will catch on and be a great fad stock, no matter what the earnings for it are, good or bad. And so, yeah, I think it's got a chance to catch a lot of people's interest and do well.
Is that why millennials are picking up Bitcoin? It's something that you can trade on your phone rather than call up a broker and have to store gold?
Oh, yeah, certainly. I mean, that was the story, the big story, or part of the big story about Bitcoin in 2017 when it went to 20,000, was that the bulk of the buying was done with people with apps that were buying less than $50 worth and using a credit card. So, I mean, when I first opened up a brokerage account, you had to have, I think, $2,000. And with these Bitcoin app accounts, you don't need any money. You can just use your credit card. So it attracted people who don't need much money to buy and can simply use their phone app to get started. So I think that's one of the things that made it really unique. And this is a mechanism for trading that took place all over the world, and not just the United States. Like the internet stock bubble in 1999 was centered on the U.S. and partly in Canada. With crypto, it was a global phenomenon. In fact, there's more crypto trading being done in Asia and in China than in the United States and Canada, even though it seemed like for 3 months there, 2 years ago, that everyone was getting into it and everyone was certainly talking about it. No doubt about that.
China back in May banned the mining of cryptocurrencies, but I haven't heard any enforcement being happened. Is that pretty typical for China? They pass all kinds of laws, so at any moment, if they decide to enforce it, they can jump on somebody.
Oh, I think so. And then sometimes they'll do periodic purges, the Communist Party in China, where they'll, mark out a bunch of officials and say they're committing these crimes. They may have been doing these crimes for years, but now all of a sudden they're exposed and put in jail, and that gets headlines for the leadership at the top for fighting corruption, and it scares the people below them into, being obedient and not causing political trouble. So it's something that seems to happen every couple of years, and it hasn't happened in several years, so I think they're overdue for another purge situation in China.
Yeah, there's a Chinese saying, I don't know if I have it right, you kill the chicken to scare the pigs.
Yeah, I think I've never heard that, but that makes a lot of sense. And it's funny. I was following a blog done by someone in China called "From the Provinces." I think it was the title of it. And it was very fascinating. And it was this guy telling you about these anti-corruption campaigns and this and that. And then one day I woke up and the blog vanished. So I don't know what happened, but it was interesting to read about.
Yes, I also remember the Southeast Asian businessman Rakesh Saxena, who was accused of corruption in China, and he fought for 10 years to keep from being extradited, and Canada got a promise that if he was sent back, he wouldn't be executed. But I said, what went wrong here? And he said, well, I simply bribed the wrong government officials. And he had enough money, he actually financed a coup to take over some South Pacific island for the mining rights.
Oh, wow.
Oh, yeah. So, then we take a look at the Huawei executive being held in Canada. She's one of the few women who's in the Chinese business elite, and you don't do business in China unless you're closely connected to the government. Apparently her dad, who founded Huawei, was also a top Chinese intelligence official. So that's why you might be a little suspicious of your Huawei phone. They've challenged people, by the way, take it apart, see if you can find any spying devices, which means to me you've been clever enough to hide it so we can't find it.
Oh, I have no doubt about it. I try to avoid those phones. I don't. I'm scared of the Apple phones. They're built in China. They could have put something in them.
Yeah, absolutely right. Mike, thank you so much for chatting with us.
Thank you. Great talking with you.
My guest has been Mike Swanson, editor of wallstreetwindow.com. If you have any questions for Mike or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.